Hello, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with the March 23rd stock market wrap up for you to use tomorrow or actually anytime this week because unless we have another major change, not much is going to probably change. So, first off, I want to go ahead and start with the Shanghai SE Composite. I want to show you what this chart looks like because the Shanghai SE Composite is looking pretty bullish, even though it's well off the highs. This was a very bullish chart from 2005 to the 2007 top. And this just shows you how much stronger it was than our stock market. I'll show you how much it was up 475%. I want to go back to the NYSE and show you how much the NYSE was up from 2005 to 2007 top. 40%. So, my point on this is the money that we made, that I made back in 1999 or even in 2003, I don't think can quite be made anymore. I don't know if we're going to get another taser that gives me a 2,300% return or makes a total of a 3,500% move, or from the ultimate lows 10,000% move, a Cisco with a 90,000% move. I don't know if we can find it on our market anymore. I really don't. But the Shanghai SE Composite being up 500% in 2 years, I mean, that's amazing. And right now, we're looking at another very bullish advance. Look at it from the November lows. We're going to use the November lows now, and the index is up 35%. Compare that with our New York Stock Exchange. Let's use its November lows. 11%. So once again, we have the Shanghai SE Composite destroying the returns that the United States market's providing. So if any of you can apply my system and methodology to Chinese stocks, you are going to become extremely, extremely wealthy. Now, I'm putting this video out there because if anybody has access to a charting software like a former subscriber used to named Randy, and you know Mandarin Chinese, and you can use the charts and you know what I'm looking for whenever we go long, stuff that looks like AIPC ended up looking like. It's one of the few ones that we've had that's worked and been nice. You're not going to get a 195% return from June to March. You're going to have probably a 1,000 to 500%, maybe 500 to 1,000% return, because you're going to be in a market that's actually ready to really advance. And that's why it's kind of sad that I can't get a hold of the Chinese stock market, because if I could, from 2005 to 2007, if this index is up almost 500%, then that means that I would have been up at least, golly, I would have been up huge. I would have been up anywhere from 1,000 to 2,000%, just anywhere around there, because I definitely could have gotten a big chunk of that move, a big, big, big chunk. And I remember Randy, I don't know if he was posting on Investors Paradise or if he was posting it on our very first BigWaveTrading.com website, but he posted those charts that showed you the Chinese stocks broke out and ran from $2 to $10, $3 to $12. Over and over and over. He posted like 4 or 5 charts that were perfect. The only thing they were missing was the beautiful and ever so elusive defined Max Green Bop. However, whatever he had would max out. Like, let's say it's an MACD or whatever, blah, blah, blah. Let's just pretend. And then all the strong volume and the beautiful price patterns he had made it very obvious that it works. Cup with handles, cup patterns, saucer with handles. You know how to read them correctly. Match it with volume, and then match it with whatever this Chinese software program had as BOP. It was completely in Chinese Mandarin, and I have no idea how to read it. However, our old subscriber, Randy, man, I wish he was still a subscriber because he had access to that charting program. It was free, and he can make a lot of money on it. So this is a big like PSA, public service announcement, for anybody that has access to the Chinese stock market. If you can find the Chinese stock market software that is similar to the Telechart software, my patterns that you'll see on all my past big winners, which I hope are going to be future big winners again, you can easily find those in your market right now because that's where all the IPOs and investments are. I mean, here's our last recent IPOs. PSOF, LOPE, okay? And then what is it? MJN. That's it. So that's our recent IPOs. That's really bad to have only 3 IPOs in 1, 2, 3, 4, 5, 6 months. That's bad. That's fewest ever I can remember. That's 1.1% of all New York Stock Exchange traded stocks are IPOs. That's just low. I remember in 1998, 1999, I know that the NASDAQ had to be around 10 to 20%. My God, it had to have been. Had to have been. It was just IPOs every day. Every day there was an IPO. There were websites devoted solely to IPOs. I remember. I was there. So it's pretty amazing. Anyway, enough about history. Nobody likes it anyway in the United States of America. So let's go ahead and go into analyzing the charts. I hate to tell you this, folks. Straight up move like this is not good. And while it's nice to see a 22% gain in our stock market in such a short amount of time, there's some problems. And one of them is that as the market's moving up, besides the initial bounce off the low, it had good volume. A lower volume day that was up. Volume was slightly higher. That was our follow-through day. The next day it's up again, but volume's lower. Then volume's up, but a major intraday reversal. Then it has a big up day. Volume's lower. Oh, that's not good. Okay, now we have an up day, bigger volume. So now everything looks all clear. Everything's fine, right? Nope. Then we ran into the 19th. That wasn't good. And then, of course, the 20th was a distribution day. But today, all is well again, right? All is well. Big, huge breakout. However, look at volume. It's lower. Okay, so let's ignore. It was options expiration, Josh. You can't use options expiration on Friday. Somebody actually said. That's why I used the third person. But if you look at Thursday's volume, what was that? 1.9 billion? And then what was today? 1.91 billion, and that was 1.95 billion. Volume was even lower than on Thursday's failure at the 50-day moving average. So it's not that bullish, today's move. Still, it'd be great if we had beautiful charts everywhere. However, I only have one new long tonight, and it's not even a new long. We're already long this stock. However, we've partialed out of some of it to protect ourselves from a weakening market. But however, it's broken out now, so we can add back what we sold. However, is it perfect? Absolutely not. Could it have been perfect? Yes. That's what stinks. That's what really, really stinks. But that's life in this market. So let's go ahead and start moving on. NASDAQ. Awesome day today. All right. From its lows, the NASDAQ is up a nice 22%, just like the NYSE. Also, same problem. Good volume. Another up day. Volume's lower. Then we finally get in a big up day. Good volume. Next day, up slightly, lower volume. Uh-oh. Then a distribution day in the NASDAQ. Then we have a big, big up day that takes care of it. However, volume's lower. Not good. But don't worry about it because we break right through the 50-day moving average on very strong volume. And that actually was a good day. However, Thursday, Friday was a distribution day. 2 distribution days now since the beginning of the rally. That's kind of worrisome. Still didn't break the lows of the day, which was 1454, 1448. Held that at 1457. And then, of course, today, big, huge, big rally, which is always odd because the biggest rallies, as I know because I was in it, the 2000-2002 bear market and the 98 bear market and the 97 bear market, the biggest rallies come in bear markets. So don't forget that. Up 6.76 that day. Up 7% that day. How many days after the 2003 March lows were up 6.76% in the NASDAQ? 0? Interesting. Let's move on. Let's see what the Dow Jones Industrial Average looks like. Of course, it had a very strong day today. All right. But look, volume's lower than Friday. Forget Friday again. The options, remember? All right, Thursday. Uh-oh. Volume's still lower. Besides this day, 310. Watch the rest of the days. Lower volume, big up day, lower volume. Kind of big up day, lower volume. Uh-oh. Negative reversal. Bad intraday reversal. Bad close. Big up day. Oh, volume's lower again. Big up day. But volume's lower than on the 16th. So it's not that great. Don't worry. But on Thursday and Friday, then that shows you why. Big distribution day. But today it's all good again. However, volume's much lower than Thursday and Friday. That's just not good, folks. So the market, it's in an uptrend. We have to respect that in the short term. That's why I'm going long stocks. However, is this a brand new bull market? Go study the 2003 real bottom. Look at your volume on the way down and then on the bounce. Now let's look at commodities. Oil. Look at it, Raleigh. Look at that. Uptrend starts. Looking good. China's doing great. We have inflation. We're creating paper like it's toilet paper. Money like it's toilet paper. Not good. But that helps. Platinum. Another good day today. That helps silver. Not a good day today, but did it close at the low of the day? No, 2 cents off the low of the day once again. And then there's gold. Pretty bad day. Did it close at its low of the day? No, 938. Low day was 936. Still, I don't care. Here's what the ETFs look like. Notice the green bop in the indexes as they go up. So, let's see, what's the other one? UGL. Look at all that green bop. So bottom line is, I'm not, even though today's down day in gold, I still think it's going to be end up buying the dips on gold. If you can get it, get it. All right, everybody, I'm going to wrap it up. I'm going to be back with part 2 for the subscribers. Aloha.